Hello everyone. In this video we are going to cover foreign currency transactions where a finance lease is entered into with a foreign supplier. We're going to cover the practical elements of IAS 21 by going through an advanced CTA question. How to tackle a Forex question. So at times these questions can be daunting, but there's no need to fear if you have a tried and tested established method of tackling this. Step number 1, read the question. Step number 2, plot key values on a timeline. And step number 3, draft your responses with respect to IAS 21. Supply the journal entries regarding the above-mentioned transactions in the financial records of Core Capital Limited for the year ended 28 February 2012. Ignore any tax implications. All effective interest rates must be rounded to 4 decimals. Round off all amounts to the nearest rands. This question was sourced from a UNISA TAT letter. So bear in mind that your journal entries need to be provided in ZAR, especially if you are a South African student writing a South African exam. Then it is a given that all of your foreign currency transactions will need to be translated and reported in ZAR. Rounding is mentioned specifically for the purposes of calculating your interest, but bear in mind that your final answers are rounded to the nearest rand. Okay. Your year end is 28 Feb 2012. This is very important, especially when drafting that timeline. And your answer needs to comply with IFRS and not any other accounting framework. We're going to read through this question, and I want you to please bear in mind that each question will have triggers, and each trigger will have a certain implication to it. So as we read through this question together, we are going to identify what these triggers are and what their implications will be. The information in this question relates to Core Capital, which has a 28 Feb year end. On 1 March 2011, equipment was acquired from a foreign supplier in Germany by means of a finance lease agreement. The equipment was brought into use on 1 March 2011 and the useful life is 8 years. The cash price is 100,000 euros. The interest rate is 8% per annum. In terms of your installments, 6 installments of 19,076 euros, each payable every 6 months. Your payment dates are 31 August and 28 February each year, starting 31 August 2011. Okay, so those dates are very important. Now that you have these dates which have been mentioned, please plot them onto your timeline. 1 March 2011 being your transaction date, your first settlement date or your first installment date will be 31 August 2011, and as at 28 Feb 2012 that will be another installment date, and that will also be your year end. In terms of the transaction, bear in mind that it's an asset acquisition. Equipment was acquired. You will be settling this transaction in a foreign currency, which is euro. A useful life of 8 years was given should you need to calculate depreciation. And in terms of other important variables, bear in mind that this is a finance lease. So you will need to compute an amortization table. And remember that your amortization table will need to be in euros. The trick behind this is that it will first need to be in euros before you translate it into ZAR. And also in terms of your intervals or your payment frequencies, installments are paid every 6 months and not annually. So bear that in mind. The following exchange rates are applicable. The question gives you exchange rates, which obviously needs to be plotted on a timeline. So bear in mind that your spot rates refer to exchange rates at a specific point in time, whereas your average rates cover a specific portion of your timeline. Okay. Now, in terms of drafting your response to IAS 21, we need to be able to have some sort of strategy to put everything together. We have gone through the question on a line-by-line basis. We have already analyzed the key components of information. Okay. We will need to calculate an effective interest rate. We will also need to ensure that key information is present on the timeline in order for us to do this. We will first need to capture data on an amortization table in euro, and then we will need to translate this data into ZAR, and only once we have the information in ZAR will we then be able to respond by providing our journal entries. So as you can see, we've gone through the question already, and in terms of the variables, you have your present value of 100,000 euros. You have 6 installments, which means that any 6 and your payments are 19,076. Your future value will be null. In terms of using a financial calculator, it's important to understand what your unknown variable is. And in this case, it is our interest rate. So using your financial calculator, bear in mind that your payment frequency is 2, because in a year, you're going to be paying twice a year. So bear this in mind in order for you to accurately get the correct interest on your financial calculator, which should come out to be 7.9994%. Now that we have our interest, the next major thing for us to do will be to capture this information into an amortization table. And remember what I said already, this will need to be in euros, okay? Because the data that you have is in euros. So starting off on 1st of March, that's your transaction date, you have a balance of 100,000 euros. Then on 31st August, before you make a payment of 19,076, you will need to basically calculate your interest, and you will do so by multiplying your balance of 100,000 multiplied by your interest rate, which you have, to give you 4,000 euros of interest. You would then subtract your repayment of 19,076 to then give you a balance of 84,924. And your next payment will occur on 28 February 2012. Just as how you did previously, you will now calculate your interest on your new balance of 84,924. You will then subtract your repayment, and then you will get a balance of 69,245. And you will do this process for the remainder of the lease. Now that you have this entire amortization table in euros, now it's very important for you to use the Forex rates that the question has given you and translate this info into ZAR. And there's a small trick to this, but we're going to go through it number by number, and I will mention that to you in a moment. So in terms of translating this data into ZAR, remember that for translating your interest and your repayment, so what will happen is that for your interest, we will use the average rate. For your repayment, we will use the spot rate. For your balance, we will use your spot rate. So that's really crucial because you don't want to get it wrong. Okay, so starting off with your balance, 100,000 euros multiplied by your spot of 10 will give you 1 million ZAR. Okay, then you need to translate your interest. And as I've mentioned previously, for interest, you will use your average rate. So 4,000 for interest multiplied by an average rate of 10.06 gives you 40,240. Your repayment happens at a specific point in time, so you will use your spot rate for translating your repayment. 19,076 multiplied by your spot of 10.05 gives you 191,724. Then the next trick is that you will not calculate your Forex. You will first need to calculate your ZAR balance at 31 August 2011 before calculating your Forex. So your ZAR balance will be 84,924 multiplied by your spot on the day of 10.05 to give you 853,486. Your balancing figure will then be 4,960. And you get this by taking your closing minus your interest plus your repayment less your opening to give you 4,960. You'll apply this exact same logic as at 28 February 2012, and that will be important because you will need this information over here. Now that we have our amortization table in ZAR, we can now take this information and capture our journal entries. Okay, so remember to have all of the necessary headings. You will debit equipment of 1 million and you will credit your finance lease liability of 1 million ZAR. That will be journalized on 1 March 2011. Your next transaction that you will journalize will be on 31st August 2011, and this is your movement that you would extract out of your amortization table. So you will debit finance cost profit or loss for 40,240, debit Forex difference profit or loss 4,960, credit bank financial position 191,714, and your balancing figure will be finance lease liability financial position 146,514. And remember to include a narration. Similarly, what you've done for 31st August 2011, you will do exactly the same thing for 28 February 2012, and you will put a suitable narration. I hope that you have found this video useful. Click like and subscribe for more. If you have any topic suggestions in the field of financial accounting, MANAC or auditing, feel free to comment on this and let me know. Thank you very much.